Time report. I'm Ekta Batra. With me is Mangalam Malu as well as Sonal Putra. Well, it is turning out to be quite a quiet session and no surprises there considering that it is close towards the close of the year. So a lot of the markets are on holiday and the markets in general are winding down the year. So not much in terms of cues at this point in time. A lot of stocks in focus, which we will be discussing over the next 60-odd minutes. Central Bank, Laurus Labs, HEG, Time, Technoplast, to name a few. And we have Aurobindo, which is in focus as well, where they've received the SEC, Securities Exchange Commission recommendation to manufacture a particular, or rather SEC in this case would be different, but a particular vaccine. Remember that they have been focusing on the vaccine market, and this would probably be one step towards that. It is via joint venture where they hold 80%. We will get you more details on this. Important news. There's also L&T in focus.
Yes, and it is so quiet and directionless that we are finding a lot of amusement in the fact that my tie and Ekta's shirt are the exact same color. That's about it. But it is the year end, and we are we have the markets that behave like the year end as well. The only silver lining, so to say, right now is the fact that the mid-cap index outperformance continues from yesterday. The broader market health is much better as well.
Hey Mangalam, hey Ekta. Yes, so year end, and of course lesser cues that we are getting today, but definitely mid-cap continues to be in fine fettle. We have Bank Nifty, which is seeing some declines, but with that, let's move on and get Capri Global, which is the first corporate on our radar. Stock has seen a significant move this year, up over 40% so far. Quarter two disbursals were up 154% year on year, while assets under management also grew by 47% YOY. The company has also added gold loan segment to their business. Rajesh Sharma, the MD at the company, is joining us now to discuss the business prospects and the outlook for 2023 as well. Mr. Sharma, good afternoon. Thank you so much for joining us here. Well, quarter two was really robust for you, robust disbursal growth, which drove AUM growth for you as well. Can you tell us how quarter three has been so far? Have you seen an improvement on a quarter-on-quarter basis, and what is the rest of the year looking like?
So this quarter is looking very good. As you know that in all NBFC and banking sector, there is always H2 is always better and the activity picks up. So on the same trend, our quarter on the MSME side, affordable housing side, and the newly launched product gold loan is picking up very well. And we hope, in line with what you said earlier, we will be targeting a growth of about 27%, and I think we should be able to easily achieve that. We might surpass that growth during this current year. So overall, there is a quite good momentum on the rural economy, semi-urban, where most of our branches are there. So I think it should be all-time high disbursement for the Capri.
Okay.
Right. Okay, Mr. Sharma, we understand that you've started working with HDFC Bank on the asset side as well. Can you share some details on what this partnership entails and how much incremental growth will come from here?
So HDFC Bank partnership is towards the co-lending, which is under now process. That will take off in now, I think, the current quarter. But we have co-lending partnership, which is with Union Bank, State Bank, Punjab Sindh Bank. That is already under active disbursements are happening, and technology integration is once completed. I think that will pace up further. And these partnerships we are actively discussing with few other banks as well. So we are quite confident in this co-lending phenomenon. Without putting more equity, it is quite ROE accretive, and I think this is going to be very significant development once 20 to 30% of the AUM growth will be partnered with these co-lending partners. So we are looking that their full effect should be visible in the next financial year.
Okay, all right. So, Mr. Sharma, when you are talking about co-lending, increasing your ROE, can you give us a sense of what sort of ROE and ROA do you target at gold loan and car loan with the co-lending business that you're talking about? And you're also talking about more such partnerships with other banks as well.
So if we understand the co-lending business, 20% only funds we have to provide, 80% has to be participated by the partner bank, whereas the entire spread on the 80% also comes to us. So that way, if you see, on 20% we have to provide lesser capital, but we get the entire spread on the 100% of the loan originated. Our basic role is originate the loan, refer it to the partner bank based on their criteria, and do the collection also. So this entire activity, origination, underwriting, collection is done by us, but 80% parking of the funds and the parking of the assets is a co-partner, is done by the bank. So our equity is less, but our spread is higher. So that is how this is ROE accretive. If we talk about the car loan, we don't invest any money. It is just the lead origination we share, because today we have about 7,000 employees and about 4,000 employees on the ground at various branch levels. We have almost about 500, 600 branches today operational across Gujarat, Maharashtra, MP, Rajasthan, and NCR. From that, we originate a lot of car loan lead, and out of that, we get almost about 2.5% fee. And that is a good fee income. This year, we are targeting 100 crore rupees fee income alone from the car loan lead origination, where there is no capital is employed by us. It is a purely fee income business.
All right, so you're quite bullish on the fee income business. Mr. Sharma, I wanted your perspective into, going into next year with regards to two segments, construction finance as well as affordable housing. Construction finance AUM was up quite significantly in the previous quarter, both year on year as well as Q on Q, along with affordable housing as well. Can you tell us what the asset quality trends might be within this segment? How much are you probably looking to push these two segments going into next year?
So if we talk about construction finance, we are funding those small developers who otherwise don't get time-bound money sanctioned from the banking system. And these are very affordable developers where average ticket size on outstanding basis is less than 8 crore rupees. So you can imagine they are tier 3, tier 4 affordable home developer where these fundings are done. Our overall book at a consolidated level will remain less than 25% in this segment, and this is strategy of following from year on year after. Okay. Last quarter there is little high growth, but I think this quarter and next quarter the growth will be in a manner that overall it doesn't exceed 25%. And these, if we talk about NPA in the affordable housing segment, we had one NPA which is less than 0.3% of the book, and that NPA is also now provided for 100%. So as of now, there is no gross NPA or net NPA in the construction finance vertical. If we talk about affordable housing finance, within the housing finance segment, affordable housing finance segment as per the ICRA is almost about 75,000 crore rupees, which is growing at the pace of about 17% year on year. And if we talk about Capri, which is operating through about 150 branches today, we are growing at the pace of 40% year on year since last 3 years, and we continue to grow in the current year also with the same pace. Okay. So we expect that affordable housing is a very high growth segment, and next few years continue to grow with the same pace. State government as well as central government is following this housing for all. There's a lot of impetus in terms of giving a lot of stamp duty waiver, a lot of FSI relaxation for the building smaller homes. And similarly, now smaller homes are getting built, and for those loans are also getting available from various affordable housing finance. So overall, this is going to provide a very good social impact also to provide the smaller homes for the people who can afford to buy the home within 25 to 30 lakh rupees.
That, Mr. Sharma, one of the businesses that you entered recently was the gold finance business. It started reflecting in your AUM in just the last few quarters. For this year, you have a target of almost 1,000 crores in terms of AUM for the gold business, and the long-term target that you've given is about 10,000 odd crores. You plan to add a lot of branches there. You have 130 plus branches. What are your thoughts in the kind of investments that you will be making in adding these branches, and what is this glide path to 10,000 crores? Will it be front-ended or back-ended?
So I think gold loan, when we started in August, now as of now we speak about 450 branches are operational, and I think by end of March about 550 branches will be operational, and next year by the March 2024 we are targeting about 1,000 branches. This is our target we are chasing. And on the branch setup, I think one branch we have to invest about 15 lakh rupees of capital cost and other cost. These branches essentially are on the rent basis. Only the safe vault, etc., we have to provide with the AI-enabled camera and 24/7 service system with the proper insurance of the gold. So all those things are taken care of. Now the entire expansion will happen from the branch level expansion, because these are the walk-in customer. These are not the customer we can go and chase them. Once we build our brand in the vicinity we operate in, the customer walk in and we give the loan in a hassle-free manner in a maximum 10 minutes. That is the system and process we follow. So I think looking at the gold loan market, which is about 3,30,000 crore of overall market, is with the CRISIL which is growing at the pace of 12% year on year. But still, 65% of opportunities still exist where these smaller people borrow from the Mahajan at an exorbitant rate. I think that is where a lot of growth will come. They will come to the formal segment like NBFC and banking system. And you've seen that gold loan has grown across with the banks and NBFC. I think there's a huge opportunity still exists.
Okay.
We are confident to achieve that 10,000 crore mark in the next 5 years.
Okay, all right. We'll hold you on that guidance, Mr. Sharma, in the next 5 years. But, you know, Manglam did mention branch expansion. You're doing that for the non-gold loan segment as well. You're expanding into different states, UP and others. One of the key metrics in the previous quarter was that your OPEX was quite high. So for how long are you going to probably have this kind of an OPEX figure, which, for example, was up around 131% on a year-on-year basis in the previous quarter? How long is this operating expenditure going to continue at this rate and hence probably impact profitability? Any guidance?
So our operating costs have gone up primarily because of the gold loan business expansion, because the gold business branch becomes at break-even between 15 to 18 months. And after that, it starts contributing. Still that gold loan. So this year, we expect about 70 to 80 crore rupees of loss in the gold loan segment. If we take out that loss outside the MSME book and other book, I think then our profit would have grown at least 40 to 50%. Because of the gold loan, the profit will remain at the same level or maybe slightly lower. But an operating cost, OPEX is very, very high because entire expenses we are writing off in the profit and loss account. We are not capitalizing as a conservative strategy. So thereby this operating cost will remain elevated for at least till the next September 2023. Thereafter, once the branches start contributing, the operating cost will come down. And I think by 2024 and onwards, we'll see gold loan business itself will become profitable and start contributing towards the bottom line.
Right. You know, Fino payments is something that we always, need to ask you. You bought it in personal capacity for a short-term limited trading bet is what you said earlier. The price is pretty much close to the average price of your acquisition. Are you looking to load up more?
Not at the moment. If we see that some price corrections happens and we found it continue to be interesting to us, we might add up. But when we buy in stock, we look parallel many other opportunity also. So it depends on the pricing of that time and that time overall segment. Else we'll continue to hold that for a few months. Let's see how it does.
Okay, all right. It was a pleasure speaking with you. Thank you so much for joining us. That's the word coming from Capri Global. Some guidance, and they are expecting strong growth in the second half as well. Let's slip into a short break. On the other side, we'll put focus on some stocks which are swinging in trade on the back of news updates. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, a lot of stocks which are moving around in broader markets, and HEG is one of them, surging in trade today after the company has unveiled its plans to enter the lithium-ion segment with capex of around 2,000 crore rupees. Vivek is here to give us all those details. Vivek?
Well, that's absolutely right. So what we're talking about is we're talking about HEG incorporating a new wholly owned subsidiary called TACC. And as you mentioned, this particular subsidiary would be manufacturing graphite anodes as far as the company's foray into the lithium-ion cell business is concerned. So analysts now estimate that this particular business vertical has quite a bit of scope, and which is why the stock is doing very well in the trade today. Now, let's have a look at the kind of capex that the company has announced. The 2,000 crore capex has been announced by the company in two phases. The first phase is comprised of close to 1,000 crore outlay by the management to cater to close to 10 to 12 gigawatt hour of cell manufacturing capacity. And the second phase that the company has announced is a further 1,000 crore capex to double the capacity to cater to 20 to 22 gigawatt hour of cell manufacturing capacity. Along with that, electrode prices too have surged from the recent September lows. So both HEG as well as graphite are seeing the positive momentum of that in today's trading session.
Thanks a lot for that, Vivek. HEG up almost 8% as we speak. But one of the underperformers today, rare underperformers today, is Laurus Labs after we've heard about a fire at one of their facilities, Ekta.
Well, yes, unfortunate news which is coming for Laurus Labs. In fact, a fire occurred in a block of their API manufacturing plant in Visakhapatnam. Operations in the other two production blocks are running normally as per the company. But the unfortunate piece of news is that 2 employees and 2 contract employees have lost their lives on reaching hospital. 1 regular employee is undergoing treatment. The company has launched an investigation into this incident. The company, as of now, estimates that there is no material impact on operations, but nonetheless, sentiment negative, as you can see on Laurus Labs, and obviously unfortunate news of 4 people losing their lives in this fire.
Okay, yes, that's right. With that, we'll move on and talk about Mahindra CI, which is buzzing in trade today. Motilal Oswal has given a buy call on the stock. Sonia, tell us what else is Motilal Oswal talking about this one?
So, the stock is doing quite well. It's up almost about 3.5%. Now, the reason is Motilal Oswal met with the management and the management was very optimistic. They have a target price of 360 on the stock. They say that for one thing, the proposed sale of their German commercial vehicle forging operation, they're looking to sell it, and that's a positive. That will result in a better financial performance, and they also see very strong traction in the India business now. They spoke about how the EV orders are now gaining a lot of momentum, and the management reiterated their focus on profitable growth as well. They aim to achieve an EBITDA margin of over 15% in the near term versus 12% that they clocked in 2021. So overall, the electric vehicle business is doing quite well. The supply to a lot of EV makers, so that is working well for them. And the proposed sale of their German commercial vehicle forging subsidiary will result in a cleaner balance sheet, and that's another positive that Motilal Oswal has spoken about. Back to you.
Okay, all right. Sonia, thank you so much for that. Well, the stock that I am focusing on is Chemplast Sanmar. The stock is not seeing big moves today, but it is an important piece of information because Reliance Industries has gone ahead and increased the price of PVC resin for the 4th time this month, and this is something that we have been tracking as well. So the cumulative price hike so far has been 13 rupees per kg after the 4 rupee per kg price hike that we just spoke about. So this IFL says that confirms the improving demand conditions. Remember, PVC prices or PVC resin prices had declined substantially in the quarter gone by, and now it seems like they are bottoming out. This has come in after a long period of destocking by the pipe dealers in the pipes market. Now, PVC resin imports, they have also eased from the Chinese markets from September 2022. Earlier, the imports were coming in the country at lower prices. PVC production costs would have increased in China according to IIFL because of higher coal prices, and most of China's PVC capacity is coal-based, and that's the reason why their cost of production has gone down, and that's why the dumping prices have gone up as well, and that's something which is benefiting the domestic producers here. It is a positive development for Chemplast Sanmar. The stock is up 0.6%, but it has seen a rally this month itself. Yesterday as well, it was seeing big gains of around 5 to 6%. So yes, today quiet, but it is an important piece of news.
Important piece of news coming in for Chemplast. So thanks a lot for that. But let's talk about United Spirits. The management met with brokerage, and Surabhi is joining in to tell us why the stock is a buzz today. Surabhi.
Hi, thanks for that. So Nirmal Bang met with the management of United Spirits, and here are some key takeaways. The company says that there is no change in the demand momentum. They do see that the pace of upgrades from the popular segment to the lower prestige segment is under pressure, but they still will keep an eye on that for the next few months. The Indian wedding season is back and in a bigger way than before, and that's helping the demand as well. They're not seeing any signs of downtrend currently. With respect to the cost front, the management says that they continue to see inflationary pressure on ENA and glass bottles, 2 key raw materials for the company, and the benefits of falling crude prices and paper prices will be seen with a lag. They expect the benefits to kick in by Q4 of FY23. The management expects that the gross margins will normalize by end of FY23. With regards to A&P spends, which was lower in the first half of FY23, they expect it to go back to 8 to 9% of sales by end of FY23. The margin guidance has been maintained to mid to high teens for FY23, and Nirmal Bang has a buy rating on the stock with a target price of 880 rupees per share.
Okay, 880 rupees and the current market price is 88.86. So it has surpassed that. Thanks, Surbi, for that. That's on United Spirits. Time for a break now. Aditya Agarwal will join in with some trading calls.
Welcome back. It's the time of the year where a lot of these cash stocks start to buzz around because with institutional cats being away, the mice here are at play. We have a big move coming in on Kitex Garments up around 12.5%, 13% as we speak. TTK Prestige is the other one, which is up 9%. With huge volumes on that one. And then from the broader markets, we have Fact and Navkar Corp, both of them up anywhere in the range of 12 to 13 odd percent. These aren't stocks that we typically speak about, barring, the first couple that I mentioned, but these are seeing a fair amount of traction. But it's also the time where we talk about what's taking place in the F&O space or the F&O scheme of things. The low today of the Nifty was 17,967 made in the first hour, and as was the high made in the first hour of trade itself. And then we've been, shuffling between in this range itself. So that becomes an important point to watch. And that's primarily because that's also the space that both the bulls and bears are jostling for. As the Nifty went above that 18,000 mark, we saw the 18,000 put writers get extremely active. So the 18,000 put comes up for you on the screen. You see a fair amount of open interest addition for options that expire on Thursday itself. And this would be the monthly expiry as well. So 42 lakh shares written for a premium of 64 rupees. 18,000 put would tell you that 17,950 odd would be an important support for the market, which is close to today's low as well. On the way up, however, rallies aren't sustaining, and that's what's given bears the ammunition to go ahead and write the 18,100 call. 40 lakh calls written out there for a premium of almost 65 odd rupees, telling you that today's high of 18,134 could be an important resistance zone to watch out for, and upwards of that 18,150, 18,160 could also face some resistance. It's the last hour of trade that I'm watching out for closely because it's the Fin Nifty expiry today, and the stocks which are the ones that move the Fin Nifty index the most are obviously the HDFC Twins, ICICI Bank, and then you have Bajaj Finance and Bajaj Finserv as well. The Bajaj Twins are doing well, whereas the other three are declining in today's trading session. So to that extent, some sort of volatility expected in the last hour of trade for these stocks too.
Okay, all right, Manglam. Thanks very much for that. Talking about a lot of the financials, just throw in IOB, which is managing to gain today as well. It's already gained close to 60% year to date, and within the entire PSU banking space, that one is ruling the roost with a gain of around 3.6% at this point in time. So adding to its further gains for the year. But Aditya Agarwal joins in to discuss what the markets are looking like and his technical call. Aditya, hi, welcome to the show. Well, let's start with the entire financial space. How are you approaching it? The Bank Nifty is down marginally at this point in time. Stock-specific strategy that you would be recommending?
Hi, good afternoon, and thanks for having the show. Clearly, there is a bit of a volatility that has crept in the markets in the month of December. And Bank Nifty is something which is bearing the brunt because that is the one which had outperformed. I wouldn't say that the markets are yet out of the woods. There is still a bit of volatility that is there in the markets, especially the Bank Nifty, if you mentioned. On the upside, clearly 43,000 is acting as a major hurdle between 42,900 to about 43,000. Till the time bulls manage to take the index beyond that level and sustain beyond that, looks difficult for the Bank Nifty. And talking of the Nifty as well, as Manglam pointed out, 18,100 is acting as a major hurdle. If you flip the chart to a monthly, the Nifty candlestick pattern doesn't look all that attractive, Ekta. In fact, it's forming a bearish engulfing pattern on the monthly chart. In last 3 trading sessions, if we don't manage to make a decent comeback, I believe market could be in for another round of maybe profit booking. So on the downside for the day, 17,900 Nifty is acting as a crucial support zone. On the upside, looks difficult for markets to cross beyond 18,100. If it does so, then there is a case for a good short covering rally to 18,200, 250 on the upside. Same holds true for Bank Nifty as well. 42,700 to about 42,900 on the upside is the resistance zone. On the downside, 42,300 is the support zone. So maybe markets could remain in this range, both the Nifty and the Bank Nifty, for some time.
Okay, so markets could remain range bound. Aditya, in a volatile market like this, what would your individual picks be?
So there are pockets of sectors which are outperforming. Clearly, metal is something which is buzzing in trade and looking attractive. Yesterday also we saw a good short covering rally there. So JSW Steel is something which is looking good on charts. Maybe stock is headed to levels of 790 in the medium term. traders can definitely latch on to this stock, put a stop loss closer to about 740 on the downside. Second stock recommendation would be from the L&T space, capital space, which is L&T. Clearly, stock has been an outperformer of late, and recent correction do provide a good opportunity for fresh long in L&T. So traders can look at going long in L&T at current levels. Look for a target of 2160 on the upside with a stop loss at 2080 on the downside.
Okay, Aditya, thanks a lot for joining us, taking us through your individual technical picks and some charts as well. Slip into a short break now. On the other side, Manisha Gupta will join us to tell us how this year turned out to be a meltdown for the crypto universe. Stay tuned. Welcome back. Still tuned into Halftime Report on CNBC TV18. Well, steady for the markets. It's the Bank Nifty, which is the one underperforming with cuts of around 130 points as we speak. And across the board, there is some pressure that we are seeing on financials as well. But that's about Bank Nifty and equity markets. But euphoria, scandal, meltdown, contagion, bankruptcy, manhunts and arrests. If it's drama you were looking for, the cryptocurrency ecosystem had it all. 2022 became the year that broke crypto's back. Manisha Gupta recounts what could have been, what went wrong, and what 2023 holds for the asset class that could have been.
The year 2022 witnessed the crypto winter loaded with sell-offs, scandals, layoffs, and unfavorable macros and markets. The shutdowns, rug pulls, and the contagions that followed made matters further difficult. The market is full of debt due to rise of centralized lending schemes. 2020 onwards saw a huge build-out in retail, yield-based DeFi, crypto shadow banking, and unsecured or under-collateralized lending. The pain started with a sustained sell-off in cryptos. For the current year, the prices have declined sharply, down by 60% for Bitcoin, Ethereum is down 64%, decentralized Mana is negative 88%, and meme coins Doge and Shiba Inu down 47 to 72%. The total crypto market capital hit peak at their $3 trillion, which has now come crashing down to below $1 trillion, a more than 70% of decline. The sell-off was accentuated by collapse of algorithmic stablecoin Terra USD. It was clear from the events that followed that the credit risks and counterparty risks were not assessed with vigilance. Down went the Celsius network, once valued at $20 billion. Same happened with Three Arrow Capital. Equinox, which was listed on Nasdaq, also shut shop. The other names like Wald, Voyager Digital met with the same fate. And towards the end of the year, the once valued at $32 billion FTX crypto exchange filed for bankruptcy, followed by BlockFi and Bitfront in Singapore. The other market, which is NFTs, and that was quite a rage and became a mainstream phenomena in 2021, also saw a meltdown in 2022 with volumes crashing nearly 70%. And then there is more, and this is from miners who, due to fall in crypto prices, have not paid electricity bills, leading them to sell their holdings. The total cryptocurrencies as of now stand at more than 10,000 in number, and in last 10 years, nearly 2,421 cryptos have failed. When markets started to fall, funds, lenders, others were forced to sell, leading to a domino effect. Street believes that 2022 may be drawing to an end, but the crypto winter could last another 6 to 8 months.
All right, so that was Manisha in her multi-metaverse explaining what went down the crypto road in 2022. With that, we'll step into a short break, come back to reality, talk about the pharmaceutical stocks. We'll be joined by Alok Malik, who's the Executive Vice President and Business Head of Glenmark Pharmaceutical.
Welcome back. For the markets, it's quite quiet. We have the mid-cap index, which is marginally outperforming, so up around 0.5% at this point in time. A lot of the sugar stocks are doing well. So Mavana Sugars, for example, is up around 5% at this point in time. Seems like that is one segment which is seeing a lot of traction. But let's focus on the pharmaceutical space. Glenmark has been in focus because just a couple of days ago, they launched a triple fixed-dose combination drug for diabetes treatment. The drug contains teneligliptin, pioglitazone and metformin. So these are the three components of the drug. And it is the first company to launch this particular combination in one drug in India. Alok Malik, the Executive Vice President and Business Head India, Glenmark Pharmaceuticals, joins in to take a couple of questions on this. Alok, hi, welcome to the show. Well, let's start with the question that what is the market size of this particular diabetes drug that you all have launched?
The overall diabetes market is roughly around 17,000 crore, out of which oral hypoglycemic drugs are approximately 12,000 crores. The triple combination that we are looking into this is roughly around 7 to 8% of the total oral hypoglycemic market, which comes to around 800 crores or so.
So, Mr. Malik, can you explain to us what is the potential size of the drug launch in terms of competition as well? And how much competition exists in market currently, and what are you expecting in terms of further launches here?
Yeah, so from the molecule combination point of view, so this is the first of its kind. It's a unique combination of a DPP-4 with metformin and pioglitazone. It would directly or indirectly compete with existing combination of sulfonylurea, metformin, and pioglitazone also. So, but since there has been a very good acceptance about DPP-4 and metformin, and pioglitazone further adds to in terms of the overall treatment, so that's why this combination has huge potential. And as I mentioned about that, the overall estimated size of the market where it would compete is roughly around 800 odd crores.
What would the price of this combination be versus buying these drugs separately? I mean, how much cheaper is it going to be for the patient?
Yeah, so it would be roughly around 40 to 50% lower than the individual drugs if they are to be bought separately. The price per tablet for this combination is 14 rupees and 90 paise.
Are you expecting other companies to launch soon?
See, India, I mean, there could be possibilities of other companies also to follow as soon as it happens, very frequently in most other molecule category, including diabetes. That's fine. I think the more the competition, probably that will help also to disseminate the information at large number of HCPs and for the patients.
Okay, Mr. Malik, generally fixed dose combinations have been frowned upon. What is your comment then on launching such a drug, which is actually a triple FTC, a drug which contains 3 combinations and will in fact be the first in the market?
So I think FTC in general, for a quite long period now, has been a very good acceptance, not only in India but globally as well, because of the kind of compliance it brings to in chronic patients, for the treatment of chronic diseases like diabetes, hypertension, or alike diseases. And we can see that, there are various combinations that are available in the treatment of such chronic diseases. And there has been overwhelming acceptance of this because it really solves one major problem of compliance for the patient who otherwise have to take multiple pills during the day. And it solves that major problem for the patients.
So do you have any other launches which you have planned in the diabetes space here?
So I think diabetes, like a few other focus therapy areas like cardiology, dermatology, respiratory, is a very focused therapy area for us. And we constantly have been working on bringing innovative formulations basis the patient need. I think the lobeglitazone formulation has been brought recently by us. Teneligliptin with pioglitazone also was brought by us, and various combination pertaining to sitagliptin and other combination also have been brought by us. Recently was teneligliptin and dapagliflozin was also first time in India has been brought by us. So I think we are constantly working on basis the unmet patient needs in this therapy area, and we'll continue to bring newer products because they are one of the driving force for our growth strategy in Indian pharmaceutical market.
Okay, well, you seem to be quite positive on the entire diabetes space, and to be fair, you've been quite active on the launch front since 2015. But if you had to talk about the larger growth estimate for the Indian market, the Indian pharmaceutical market, what would it be? What can you guide us with?
I think based on IQVIA estimates, for this year is going to get close something around 7 to 8%, and next year it is expected to around 8 to 10% or so.
Okay, all right, Mr. Malik, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Glenmark, where they have in fact launched a diabetes drug which has 3 combinations, will be priced at around 14.5 rupees or 15 rupees per day in terms of treatment, expected to be 40% cheaper than what is available in the markets. Should be a win-win for patients. But nonetheless, there is more news from the Indian pharmaceutical market that we are tracking today, and that is for Aurobindo Pharma, where the Subject Expert Committee of the Central Drug Standard Control Organization, or the CDSCO, has recommended a grant of permission to manufacture and market a vaccine which is called PCVI-15, which is basically a pediatric vaccine which is for pneumococcal infections. It is positive because this would probably be a foray for Aurobindo into the vaccine space. This permission is via their joint venture company, 10Gene, to manufacture the vaccine. And the manufacturing will be done by Turgene Biotech, and the manufacturing part of it will be by Turgene Biotech, and the other part of it will be by Auro Vaccines, which is a wholly owned subsidiary of Aurobindo. Now, Aurobindo holds 80% in terms of the joint venture. So this is definitely a positive because they are making a foray into the vaccine space. They will expect formal approval from the DCGI soon enough, but nonetheless, this should be positive. A pediatric vaccine is what they would possibly launch in the Indian market in the coming days.
All right, Ekta, thanks a lot for that. That's, I think, quite a heavy dose of all the pharmaceutical things that are happening. But, just before we slip into that short break, keep an eye out on the market. Something interesting is happening. The Nifty is holding on to the same gains that we saw at the start of the show, but a couple of components are changing. The metals, they continue to do well. The IT pack has come back to the fore. So we have the IT index, which has moved to the high point of trade, led, of course, by all the heavyweights. We have Infosys, TCS, Wipro, all of them at the high point. On the other hand, what's fallen is the FMCG pack. We have HUL, which is at the low point of trade. Britannia is at the low point of trade. And the Nifty Bank, too, has fallen below that 42,500 mark. It's virtually at the low point of today's trading session so far. In fact, the Nifty Bank is down almost 450 points from the highs of today's trading session, down about 131 odd points. So the IT support has, balanced the decline that has been caused by the FMCG and the banking names. IT and metal continues to do well. Take a short break, come back. We focus on the commodity space. Manisha Gupta.
Specific stocks are buzzing around, though the Nifty as well as the Sensex have completely flattened out at this point in time. We have the mid-cap index, which is managing to hold its head above the water, but we have the Bank Nifty, which has declined further, so now down around 0.4%. Largely, it is still a quiet trading session, considering that a lot of the global markets are shut for holidays. Talking about specific stocks, JSPL is doing well. So that stock is up around 7-odd%. It's been a good gainer on a year-to-date basis. It's gained around 50-odd%. Maybe there is some amount of optimism with regards to China and the easing in terms of the COVID policies there. Time Technoplast, there was a repeat order win which came through for that particular counter. It's gained around 14% this week. It's up 7.5% at this point. FACT has had a brilliant week. This fertilizer company is up around 21% on a week-to-date basis, and it's gained 123% on a year-to-date basis. So it's just going from strength to strength. In fact, it's had quite a spectacular December where it's gained around 100% in terms of gains just in this past month odd. But let's now go across to Manisha Gupta, commodities editor. She joins in to give us a roundup. Manisha.
Thank you so much for that, Ekta. Well, I'm going to talk about the cotton prices, where we have seen a very sharp decline in the the spot prices, that is because the futures trading is not available anymore now from the month of Jan onwards, and December clearly has gotten into an expiry mode, so you can't trade anymore. You can only close your open positions right now. We will be joined by a guest, Mr. Damodaran, who will talk to us about on what really to expect in the spot markets here. We clearly have seen a lot of movement happen in the spot markets because of the kind of volatility that the cotton prices have seen and the impact thereof on the mills as well. Thank you so much for joining us. What is your sense, first of all, on the fact, Mr. Damodaran, there is no futures price anymore, there is no reference price, and we have seen a very sharp correction or decline come in for the spot markets or mandis. Clearly a good news for the textiles, but how does the overall value chain look to you?
Good afternoon. And actually, the Indian cotton now aligning with the fundamental factors of the demand. This is our first opinion. It's a good and positive trend from the industry point of view, because how it happened, the first trigger came from American markets. China, instead of buying cotton, first time, even after 2012, this is the highest in record number of cancellations, around 1.45 lakh bales they cancelled the last week. So it sent a trigger towards a negative sentiment. And why they are doing this? It's natural. They are facing big turbulence in their own domestic markets. And China is a very dominant player, around $270 billion of exports and $300 billion of domestic consumption is for textile in China. So such a big player staying away from the market naturally trigger negative sentiments, and it triggered first in US, and naturally it's reflecting in India also. We are closely tracking the global fashion companies' retail sales trend. Many companies posted November end results. In that, even Europe, they are all facing a lot of cost increases. Even Europe sales are not contracting much. But if you see China, 30% many brands posted a contraction in retail sales in China. Multiple companies declared that they closed down their stores in China because of the COVID outbreak.
Okay.
So such a consuming country staying away is creating a panic in the market. This is first observation. Second, in terms of India, already 50% of the capacities, if you take during the first month of the quarter, October, 50% of the spinning capacity was idle. And in recent times, never we witnessed such kind of a downtrend in the market. And now slowly capacity utilization is inching up. Okay. But very important factor to note is already we lost 30 to 35 lakh bales of consumption in this first quarter of the cotton year. And we can't recoup this consumption because even if we run higher. Yes.
As you said, Mr. Damodaran, yes, there's a bit of a loss there, and the loss is not just in India, but globally as well, where we have seen weak trends coming in. But as we get into the new year, do you see textile as an industry see some improvement, whether it's about cotton exports, textile exports? Because we do understand that the last couple of quarters have seen a decline across both of these areas.
Yes, actually, we can say the industry, we already bottomed out. So there is an opportunity to grow. And I can say two positive things. One is US retail sales showing a decent momentum, and contraction is not as expected. Even today, MasterCard, they published their own data on their sales. Apparel sales in holiday season up by 4% in value terms. This is not so bad. And 2-3 months, all retailers are staying away from placing new orders. So their inventories are exhausted and almost in the completion of exhaustion. So naturally, they all will come back after the holiday season. So that is one positive factor. Second positive factor, for medium term, Chinese consumption will bounce back. Okay. So now, even though they are all hit by this Omicron in a big way, in 60 or 90 days, they will overcome this because many countries followed the same pattern. And Chinese, one data says that Chinese domestic savings increased by 50% in the last 2 years because of the less spending on goods, because continuously they kept on following the lockdown policy. So we are expecting a revenge buying in Chinese market in next 90 days time or 100 days time. That kind of a shopping in their own retail market will send a positive signal. So key to watch is US retail sales and Chinese uptrend in the market.
All right. So a couple of positive cues coming in. One, the industry is bottomed out, so there's only way to go higher. And the other is the Chinese demand could be coming in soon. So some strong, shiny, bright days to look forward to as far as the textile industry goes. Mr. Prabhu Damodaran, thank you so much as always for joining us and talking about all of that sector there. With that, that's all the time we have on the show. But stay tuned. Business Lunch is coming up next.